Hey traders, in today's video we're going to look at two trading opportunities, both using Fibonacci and structure in different ways. I'm also going to show you how a lot of traders saved a lot of money in the markets last week. Hey guys, Akil Stokes here, Forex trader and head trading coach over at TradingPAUD.com, and welcome back to another Forex Market Preview video. In today's video, we're going to take a look at a few trading opportunities, one featuring advanced pattern formations and the other featuring more of a trend continuation style trade. But first, I want to start off by saying a big thank you to each and every one of you guys that left me a comment last week. Last week, I put out an early edition of the Forex Market Preview, really because we knew that it was going to be a very exciting weekend, to say the least. And I wanted to provide you a warning so that you can protect your capital before all of that excitement came. So I tried as hard as I could to rush it out Friday. And for many of you, you were able to watch the video. You were able to really make the changes needed in your open positions. And well, when the big boom came over the weekend, you were out of the markets and therefore saved a lot of money. So I'm glad I can help in that way. Again, at the end of the day, it's you guys that make the decisions. But many of you said, hey, Akil, I had no idea this was going on. So just thank you for the heads up. Unfortunately, there were a few traders as well that saw the video late and got caught in the mess. And the mess was about a 200 pip gap across many of our markets. And it stinks. It happens. All I can say for you guys and for anyone like that is just make sure you stay in the mix, right? Make sure you're subscribed to our email list. That way you get these Forex Market Preview videos as soon as they come out. I know I put them out on YouTube as well, but the first thing I do when I complete one of these videos is I shoot it out to our email list. That way they know it is here. So you can access that by going over to our website, www.TradingPAUD.com. clicking that Learn to Trade tab, and it'll take you to a nice page with a few free training events over there, and a little pop-up should come up saying enter your email address. Or you can just look in the description box below on this YouTube video, and that will set you up with the site as well. Now, in today's video, I want to take a look at trading opportunities on the Aussie Canada and the Pound Aussie. We're going to start over on the Aussie Canada. Now, this was a pair that we looked at really earlier in the week. Earlier in the week, we did a training on with our transformation members on the combined technical scoring system, the CTS system. And essentially the CTS system takes everything we teach, right? We don't teach any real, I don't want to say specific trading strategies. I guess we do, but overall, we teach traders how to be a well-rounded trader, and we give them all of the tools needed to use multiple strategies or one strategy or even develop their own strategy. And part of the CTS system is taking all of the skills that we teach in the market as far as advanced pattern formations, simple pattern formations, Fibonacci analysis, structure recognition, and teaching a trader how to put it all together into a format that can be used as a trading strategy on its own. And we had a very good example on the Aussie Canada, and looking at these structure highs right here, you can see price action rolled over right to our 382, right to our projected area. Now, what's happening now is the market is putting in a second opportunity to get short. And the second opportunity is going to be in the form of what we call an advanced pattern formation. Now, if we head down to the hourly chart here, it was on the 4 hour beforehand. If we head down to the hourly chart, I'll show you exactly what this looks like. So here are our previous structure highs, right? These are our previous structure highs, which came up to our minor level of structure. And we saw a little reversal off of that area down to the 382, also down to what can be considered the left shoulder of a potential head and shoulders formation. Now, I don't want you to worry too much about the head and shoulders formation. That's actually going to be an opposite trading opportunity, one for traders that are looking to get long in the market. I want to concentrate on traders who are looking to get short at a retest of this level of structure. And what the market has done is the market has kind of ebbed and flowed its way down, right? We've put in a little retracement here. We put in a small move up, and then we came down to test that level. That level held, and now we're working our way back up to that previous level of structure for ultimately another test, and that's going to end up being a decision point. And a decision point is essentially an area in the market where, well, price action is going to make a decision. It's going to make a decision on whether it's going to fail to break that level. We'll see another retracement downwards, or we may violate that level, a break above, close above, and that would be a sign of a continuation to the bullish side. So as we've ebbed and flowed, we've actually set up something that is called an advanced bat formation. And when the market ebbs and flows, and we put in a specific sequence of Fibonacci retracements and extensions, we get some very powerful trading opportunities called advanced pattern formations. And if I take my constellation tool right here, you'll see exactly what I'm talking about. If I take this move up here, this is going to be my X leg. So we go swing high to swing low, that first retracement down, that's going to be my X to A. Price action then rallies up, right? That's going to be my A to B. Price action then retraces down. That's going to be my B to C. And then if price action continues to extend a little bit higher, right up to this 102.50s level, that's going to give me a decompletion for an advanced bat formation. And that's going to give me another opportunity to get short. You can see stops need to be above our X leg right up here. So a stop loss, if we're just using a simple ATR based stop, there are many techniques that you can use for stop losses, but let's say we're using a simple ATR based stop. That's going to give me a stop loss looking like about that. And if we're looking for targets down at our psychological number here, right, $1.02, 102 even, that's going to give me a potential reward. That looks like this. So you can see a pretty decent risk reward on this potential advanced pattern formation, along with a very high percentage of this thing rolling over. So that's one way we can use Fibonacci's to identify advanced pattern formations, to identify these counter trend setups. Another way is going to be using it for trend continuation opportunities as well. And to look at that, we're going to head over to the pound Aussie. And we're going to start on the daily time frame. And this is syndicate members. You guys are familiar with this. I shot this video to you, I believe Wednesday or Thursday. I shared with you guys the potential opportunity that's setting up on this. So you can go back and watch the syndicate video as well. But we talked a little bit about our IPDE process, the process that we go through whenever we look at a price chart, which is identify, predict, decide, and execute. Again, identify, predict, decide, execute. Identify, predict, decide, execute. Identify, predict, decide, execute. That is the routine. That is the ritual that we follow as traders. Speaking of rituals, it's funny. I got a very nice message this weekend as well saying, "Hey, Akil, love your videos. It is now part of my ritual, part of my routine to watch one of your videos to kind of motivate and inspire before each trading day." So that's pretty cool that my stuff is becoming part of your routine as well. Again, for you guys that are new to me, I wasn't just born a super great, awesome trader, right? I kind of came through the ranks like everyone else. I started as someone that was a consistently losing trader. I mean, I can lose money every day in the markets. I was that skilled, to someone that slowly turned his trading around, got the help needed, immersed himself in everything necessary to become a consistently profitable trader. Am now reaping the benefits of that, and am able to give back by teaching others. But identify, predict, decide, execute. The first thing we want to do is identify where price action is at. And you can see that we've just broken and closed broken and closed above our previous DSR level. These red and green boxes, these are our DSR levels. They stand for dynamic support and resistance. And essentially they're visual representations of major and minor structure levels. So levels of support and resistance that we should be paying attention to. Kind of helps make the job easier by having it, boom, pop out right to you on a chart. But you can see we've broken and closed above this previous level of structure here. And my anticipation is that we're going to see a continuation up to our next level of structure, up around 177 even. And as we go down to our lower time frames, our 240 chart, I'll kind of take you through what price action is doing. Let's really go down to the hourly and give us a clear picture of what's happening here. And again, syndicate members, we did a more detailed video of this on Wednesday. You can go back and watch the archived video of that. I like keeping these Forex Market Preview videos pretty short, so we're not going to go in as much details about targets and whatnot, but essentially here's what the market has done. So the market's been trending up, all right? Remember this red line here, this was our previous, right? Previous resistance level. I can never spell that word. Hopefully that's right. Previous level of resistance, which we got the break and close above. So you can see price action was rallying up, right? We ran into a little bit of consolidation here around that previous level of resistance, which is expected. We then put in a higher high, higher close. So the higher high, higher close allows us to predict that we're going to see a continuation in that bullish move. And we followed that up with a retracement, right? This is all normal, right? Extension, pullback. For you guys that have watched our Into the Gray training, right? You guys know exactly what this is. If you haven't, and you haven't gone over to that tradeempowered.com, learn to trade tab section of our website, then, put 2.5 hours to the side and make sure you watch that. Very important training. But extension, retracement, right? And then we try to extend past this level again, and you can see that we get rejected. This is that decision point where price action was rejected. And up until this point, we've held. So when I see this, right, a strong trend is going to blow past this level. When I see this, it causes me to think that we're going to see some type of relief in this market. And that means either price action will come back down here and maybe consolidate for a little bit before deciding to break out, or we may see a violation of our previous level of structure, right? So we may see a move that violates our previous lows right here. Now, based off how we teach, you would think that a violation, we call this, I would call this a bearish rotation. You would think that a violation is a sign that the market is going to go bearish, right? Bearish. It has to go bearish. That's not always the case. A rotation in trend doesn't necessarily mean a continuation in trend. So it just means the current trend is violated. And sometimes, right, instead of a normal retracement, we get something called a complex pullback, where the market ebbs and flows a little bit more than usual before extending on its normal path of normal destination, I guess, normal path of flight. And for you guys that are Elliott Wave fanatics out there, I'm not an Elliott Wave trader, right? I'm not a basher either. I do understand that the Elliott Wave principles, I do understand that they exist and how the market ebbs and flows. I'm just not a wave counter myself. But for you guys that are familiar with Elliott Waves, that complex pullback is essentially that ABCD retracement that comes after your last wave, right? So you get extension, pullback, long, extension, pullback, extension, and then you get that ABCD pattern before extending in the original direction. So it's Elliott Wave traders think that way. But what I want to look for in this scenario is I want to use my Fibonacci extensions in a different way. I want to invert it. And this is very similar to what we do in our Fibonacci inversion trade strategy, where I want to take my Fibonacci extension from up here, my swing high, to my swing low, and I want to bring it back up here. And I want to see where my 1618 and where my 127 Fibonacci extension levels are at, because these are the two major Fibonacci levels that I want to pay attention to. And I can see that those extension levels come right at my previous level of structure, that previous level of consolidation that consolidated near our past structure highs, right? Now, if I want to get fancy, I take my Fibonacci retracement tool from my swing low right here up to my swing high. Boom, we can thicken that up some as well. And you can see that we have our 382 Fibonacci retracement as well. And that's the powerful trend indicator. It doesn't mean that trends always bounce off the 382, but when in a strong trend, the 382 is going to be the most shallow retracement that we see. And you can see I have Fibonacci confluence between my 382 and my 618 and my level of structure. So CTS traders, you can add up your score for this as well. But this is going to be an area where I'm looking for the market to pull back into and then extend further up to our projected target. So using those Fibonacci extension and retracement tools in a different way this time for a trend continuation opportunity. So how cool is that? Now, before I head out, right, I got an interesting message. Again, another one. I get a lot of messages that said, hey, Akil, I've watched all of your videos, or I've watched a good amount of your videos. There are hundreds between this page and my personal YouTube page. But he said, I have a question. I find your content to be very, very, very valuable. But I'm confused. If this is so valuable, right, why would I do any of the paid content? Why would I sign up for a training course? Why would I sign up for a live Room Syndicate program? And instead of giving a long, drawn-out response to this trader on the benefits of being involved with us, because that would take hours to write. There's so much good stuff out there. I just told the trader this, right? And this goes for any of you guys wondering. If you're in love with this free stuff, if you're in love with the free content we put out on YouTube, if you think this is great, fantastic, just imagine how great the paid content is. Just imagine how great the content that you get in our trading courses and our coaching programs are if this is what we're giving away for free. And for you guys that are out there that are either 12-week transformation members or ultimate trader transformation members or have spent time in our live room, I want you to do me a favor. Underneath this video in the comment section, leave a comment. Let these traders know if you enjoyed your time with us, what benefits you found from the live room, if the transformation course is worth it. Leave your opinion. That way, instead of me saying it, because I'm always going to say good things, of course, right? That's my job as this shady salesman, to only tell you the good and sweep the bad under the rug, right? This way they're hearing it from traders that have actually been involved with us, that have actually invested money with us. And that's going to present a much clearer view of if what we're doing is worth the investment. I would say yes, from personal experience. Again, I was a struggling trader that was consistently bleeding money day in and day out. And I took the jump, the very scary jump, to invest in my education, and it has allowed me to get where I am today. And that's, I've made a lot more than what I've originally invested. Let's just say that. So for me, it was worth it. But that doesn't mean it's worth it for anybody. It all depends on how dedicated you are, how bad you want to become a consistently profitable trader. And if you want it bad enough, you need to immerse yourself and do everything possible to put yourself in a position to succeed. And having a mentor, having coaches, whether it's a full-out training course like the Ultimate Trader Transformation course, or just being involved in something like a live room or in a syndicate where you get the daily war room meeting, every little step helps push you along that path and gets you closer and closer to your goal. So clients out there, leave a comment below. Let the traders know if we're doing a good job here, and let them know if we're doing a bad job out there. I know everyone isn't satisfied, so they need to hear the good and the bad. I'm a big believer in that. I don't delete YouTube comments that don't fit my agenda. Trust me, I don't really care. But thank you guys for enjoying this video. I've got some NBA playoffs to prepare for. I will see you guys next week, either in the live room in our Monday strategy lab or back here on YouTube. And until then, plan your trade, trade your plan. You guys have an excellent end of your weekend. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.